Welcome back, my YouTube family. If you were born before 1963, I need you to stay with me for the next 10 minutes because what I'm about to walk you through could directly affect how you think about the Social Security money coming into your account this summer. And the reason this matters so much is simple. Many people in your exact age group still do not fully understand which rules apply to them, what may have changed, and what mistakes can quietly reduce the amount they receive over time without them even realizing it. Here's the situation. One of the biggest misunderstandings people have about Social Security is assuming the system works the same way for everybody. It doesn't. Depending on the year you were born, your full retirement age is different. The timing of when you claim can affect your monthly amount differently. Certain rules apply differently depending on your situation. And this summer, there are updates and decisions many retirees are trying to understand without getting a clear explanation. Right now, in 2026, there are people receiving less than they expected, people confused about what applies to their age group, and people making decisions that may affect their monthly benefits for years, simply because nobody clearly explained what matters for someone born in their specific time period. That's exactly why I wanted to make this video. By the end of this video, you'll know which rules apply to your birth year, what to double-check before July, what mistakes to avoid, and the one thing many retirees overlook that can quietly cost them money month after month. So find your age group, listen closely to what applies to you, and let's get started. Before we get into the groups, if you're not subscribed to this channel yet, please do that right now and turn on the bell notification. Here's why it genuinely matters. The rules around Social Security change constantly. Claiming ages, earnings limits, Medicare premiums, payment schedules. When they change, the SSA does not send you a personal explanation. They update the policy and expect you to already know. What I do here is take those changes, break them down by what they actually mean for your specific situation, and get that information to you before the deadlines pass and before the mistakes are already made. The people who are subscribed here find out in time. The ones who aren't tend to find out after the wrong decision, after the deadline, after the money is already gone. Hit subscribe, turn on the bell, and let's get into the groups. Group 1, born between 1943 and 1954. You are between 72 and 83 years old. You've been on Social Security for a while, and most people in this group assume there is nothing left to check. That assumption is quietly costing some of you real money every single month. The first thing I want you to look at is whether you are collecting on the right benefit record. A significant number of widows and widowers in this age group are currently collecting on their own retirement record, when they would actually receive more money on their late spouse's record. The survivor benefit can be up to 100% of what your spouse was receiving. In some cases, that number is several $100s higher than what you're getting now. If you lost a spouse and have never specifically asked SSA to compare both figures and switch you to the higher one, there is a real chance you have been leaving money on the table for years. Call SSA at 1-800-772-1213 and ask them to pull both figures and compare them directly. That call is free. The money is not. The second thing for this group, and this one hits people who had a higher income in previous years, is the IRMA surcharge on Medicare. IRMA stands for Income-Related Monthly Adjustment Amount. If your income was above $103,000 2 years ago due to a property sale, a Roth conversion, or any one-time event, Medicare may still be charging you a surcharge based on that old income, anywhere from $81 to $500 extra per month deducted directly from your check. If your income has dropped since then because you retired, because that event was a one-time thing, you can appeal it. The form is SSA 44. You can download it at ssa.gov or pick it up at any SSA office. People are getting $2, $3, even $400 a month back just from filing this one form. Group 2, born 1955 to 1959. You are between 67 and 71 years old, and this is the most critical group in 2026 because the rules are different for every single birth year in this range, and most people don't know their specific number. Here is the full retirement age breakdown, because your number is not simply 66 or 67, it is a specific month and year. Why does this matter so much right now? Because people in this group have recently made or are making their claiming decision, and the difference between getting it right and getting it wrong is permanent. If you claimed at 62 with a full retirement age of 66 and 6 months, meaning you were born in 1957, your benefit was reduced by approximately 25.8%. On a $2,000 benefit, that is $516 less every single month. Over 20 years, that is $123,840. The SSA does not remind you of this before you claim. They process the application. For people in this group who have not yet claimed, if you are past your full retirement age and still have not filed, every month you delay earns you 2/3 of 1% more permanently. That compounds to roughly 8% per year. Between your full retirement age and age 70, you can accumulate up to 24 to 32% more per month for life. On a $2,000 benefit, that is potentially $640 more every single month, forever. Stay with me because Group 3 and Group 4 contain the two changes that are happening this summer specifically, and if you're in either of those groups, the window to act is shorter than most people realize. Group 3, born between 1960 and 1965. You are between 61 and 66 years old. For everyone in this group, full retirement age is exactly 67. And right now, the most important thing for you is not just your claiming age. It is the accuracy of your earnings record before you get there. Here is something SSA has been doing this summer that most people in this group don't know about. The SSA is conducting systematic earnings record reviews, particularly for accounts that were opened before 2020 and haven't been verified online. If your record has discrepancies, and the chance of that is higher than most people expect, those discrepancies will directly reduce your monthly benefit when you claim. How much? Each year of earnings that was incorrectly recorded, a wrong number from an employer, a self-employment year that didn't get reported correctly, a payroll error from the 1980s or 90s, reduces your monthly benefit by approximately $100. If you worked for 30 or 40 years and even 2 or 3 of those years have errors, that is $200 to $300 less per month for life. The fix is straightforward, but it requires documentation. Go to ssa.gov. Create a My Social Security account if you don't already have one. Open your Social Security statement. Compare the earnings listed for every year against your own records, your W-2 forms, old tax returns, pay stubs. If something doesn't match, file a request for correction of earnings record with supporting documentation. The SSA processes these corrections. Your record gets updated. Do it now while you still have the paperwork and while the correction is completely free. There is also an option most people in this group are not aware of: retroactive benefits. If you apply after reaching your full retirement age of 67, you can request up to 6 months of retroactive payments. SSA pays you as if you had applied up to 6 months earlier. On a $2,000 monthly benefit, that is a lump sum of up to $12,000 with your very first check. Almost nobody asks for this, but it is there. Group 4. Born 1963 or later, ages 60 to 62. The preparation group. The window that is still open and won't be forever. Group 4. Born 1963 or later, you are 60 to 62 years old. You are not close to claiming Social Security yet, and that is exactly why what I am about to tell you matters so much, because the window to fix certain things without it costing you money is still open, and it will not stay open forever. Your full retirement age is 67. Claiming at 62 means a 30% permanent reduction. On a $2,000 monthly benefit, that is $600 less every single month for the rest of your life. Over a 20-year retirement, that is $144,000 in cumulative losses compared to waiting until 67. The SSA will process the early claim without warning you about this. They will ask you if you understand your benefit will be reduced. You say yes, and that reduced amount becomes your permanent number. What is still open for you right now is your earnings record. The SSA has been recording your payroll data since your very first job. That data came from your employers, and every single year there was an opportunity for something to go wrong, especially if you worked through the 1980s and 1990s, the era of manual payroll processing. There is a real chance your record has at least 1 year that does not accurately reflect what you earned. Go to ssa.gov, open your Social Security statement, compare the earnings listed for each year against whatever records you have. If something doesn't match, file the correction now while you still have the documents and while you still have years before you claim. After you claim, fixing this becomes much harder. So here is the summary by group. If you were born between 1943 and 1954, call SSA and ask them to compare your benefit against your late spouse's survivor record and check whether you are being overcharged through an IRMA surcharge by filing Form SSA-44. If you were born between 1955 and 1959, know your exact full retirement age down to the month. Understand what a permanent reduction actually means in real dollars before you make any claiming decision. If you're born between 1960 and 1965, go to ssa.gov and verify your earnings record year by year before July. Check whether the retroactive payment option applies to your situation. And if you were born in 1963 or later, open your Social Security statement at ssa.gov today, compare every year of earnings, and correct any discrepancies now while you still have the time and the documentation to do it for free. None of these things happen on their own. The SSA does not reach out. They do not warn you. That is what this channel is here for. If this video helped you, please subscribe and share it with someone you know who is in one of these groups, a parent, a sibling, a neighbor. One conversation can genuinely change someone's financial situation for years. I'll see you in the next one.